All right. Good morning to everyone in the house, and welcome to a brand new week, and of course, a brand new month. So, happy new month to you guys, and I do hope you all had a great weekend and are ready to dive into the market with fresh energies for the week. Interesting enough, we've got a lot of happenings right now in the global landscape. Trump's new trade tariffs are shaking things up a little bit. The Fed's next move remains uncertain at the moment, and global markets are feeling the pressure at this time. And of course, this means we have some high impactful setups to track this week, and we are going to be breaking them all down together during the course of the session. And as always, we are going to be monitoring three financial instruments. We're still going to replicate what we did last week. That is the US All Sport, which is currently caught between supply disruption from Canada and Mexico following the tariff situation, and of course pressure from OPEC plus, and of course demand concerns as we head into a potential volatile trading week. Then we're also going to be looking at the USDJPY again. In fact, I was caught between taking on the GBPUSD or the USDJPY, but after much reflection and looking at the market dynamic and the trading setup I was able to identify on the chart, I think I want to take on the USD JPY. Well, the yen is pushing back after a deep last week. We saw what happened during the course of last week, especially after the Fed's interest rate decision. And with the Bank of Japan's tightening expectations, it is narrowing the US Japanese yield spread, and of course the risk sentiment as well, all playing a role in making me choose this particular asset for the week. So you do want, if you're a USDJPY fan, you do want to see what the expectations are looking like around the current market dynamic. And finally, I'm going to be looking at my favorite, the gold commodity. Of course, we saw what happened last week. Gold hit an all-time record high above the $2,800 for the first time, and currently gold is still hovering near its all-time high and caught between a US dollar strength, inflation fears in the United States. We saw the US core PCE last week, inciting some potential inflation again, and safe haven flows from the market uncertainty, especially around the trade war situation that we are experiencing. So we have some exciting trading setups developing at the moment, and today's session is all about preparing to navigate the market dynamic with confidence and spot the best opportunities for us all. And during the course of the weekend, I was able to share my thought process on the gold commodity. By now, if you're following me on this channel, you must have seen it. And I did updated us on my Telegram and TradingView platform this morning on what setup we are looking at. So for the USDJPY and the US All Sport, I will definitely be taking us on a top-down analysis on that one. So stay tuned in so you don't miss out on that one. Then for those who are joining on for the first time, you're highly welcome on board. Very excited to have you around with me this morning. And my name is Sheriff Daramola, and this is the Forex Morning Mastery. We run this session 3 times in a week: Mondays, Wednesdays, and Fridays. And it is not a signal service platform, but instead an educational platform where we all come together to have a deep understanding of how the market participants are behaving through the lens of price action and fundamental analysis. So you are highly welcome on board, and I do encourage you to actively engage in the comment section. So if you have any questions, feel free to drop them. I'm ready and willing to be of help in that regard. And do not forget to give the video a thumbs up. Your likes are very important. It helps the community to grow. It helps the algorithm push the video to a wider audience, and most of all, it inspires me to continue to do more of this. So you're highly welcome on board. So as always, the first thing we normally do, of course, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for this week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the charts, giving us valuable information and, most importantly, timing to strategically position ourselves for the next move. Now, based on the asset we are looking at for this week, I usually focus on high impactful events, and that will be from both the United States and the Japanese economic docket, considering the assets we are looking at. However, there are times when we do not have many or no high impactful event at all, so we try to include mid-tier economic features just to have a broader view into what majority of market participants will be looking at to make a well-informed trading decisions. Now, for today, Monday, February 3rd, we are looking at only one high impactful event, which is coming in from the United States economic docket. However, we still have some other mid-tier economic features to look out for, but at the moment, let's look at what this high impactful event is looking like for today. So Monday, today, February 3rd, we are looking at the ISM manufacturing PMI from the United States economic docket, and this data here, this event is going to be coming up by 3 p.m. UTC. That's about 4 p.m. local time. And what is this event all about, and what is the implication to the market? Now, the ISM manufacturing PMI is another economic indicator that measures the health and performance of the manufacturing sector in the United States. So it's usually known as the Performance Managers Index. That's a PMI, and it's an index that runs between 0 to 100, where anything above 50 is considered as positive. That is, if the data comes in higher than 50, it shows that there is an expansion in that sector. And if the data comes in below 50, it shows that there is a contraction in that particular sector. So a reading below suggests that there is a contraction, of course, and this could lead to weakening of the US dollar, and a data above 50 shows that there is an expansion, which could result in growth in the US dollar. Now, in the last 6 months or close to a year now, the manufacturing sector has always posted below 50 mark. It has been struggling between 47, 48, and not until last month, December, where we had a 49.3 coming in from the manufacturing sector, showing that it is edging towards the 50 mark. And from what we are seeing and from what economists are projecting, and based on what is on ground at the moment, they are suggesting that the data may come in at 49.5, a little bit higher than the previous month data, which for me looks promising. So we look forward to see what the actual data is going to be. Will it be just as market had expected, below expectations, or even beyond expectations? So we all understand the implication of this to the US dollar. If it's higher than what market had expected, we are likely going to see a rise in the US dollar, and if it comes in lower, then we will likely see the dollar drop to the downside as an immediate reaction to that report. Then today, this morning, we are looking at the OPEC Plus meeting, since we are monitoring the crude oil commodity as well. So the OPEC Plus, they usually have their I think first meeting of the year during the first week of February, and it came this morning. I think it's still ongoing at the moment. I'm yet to get an highlight. I've looked all over the internet to see if there is a feed I can actually give us today, but there is none at the moment. But trust me, as the event unfolds, I will definitely update us on all other platform, of course, and also update us on Wednesday's Forex Morning Mastery. So today, the OPEC Plus meeting is going on, and it's definitely going to be influencing the sentiment around this current market structure. Then later on today, we are going to be looking at a couple of speeches from the Fed officials. We are looking at Bostic, who is the Federal Reserve, the president of the Federal Reserve Bank of Atlanta, and is also a member of the voting committee. So we're looking forward to hear what he has to say. And of course, we have Musalem. Musalem, this is my first time saying the name. Musalem is also a voting member of, is a FOMC voting member, and is also the president of Alberto. President of where is that? Is the president and CEO of the Federal Reserve of St. Louis. So we are looking forward to hear what he will say, and of course, market participants will be analyzing his rhetorics for ideas into what the future monetary policy decision is going to be in the United States. So these are major events we are looking forward to. So let me come again. We are looking at the OPEC Plus meeting, 8 a.m. It's ongoing at the moment. We are looking forward to the ISM manufacturing PMI coming up by 3 p.m. UTC, and we have the Fed speeches. One is coming up by 5:30 p.m. UTC, and the other one much more later in the day by 11:30 p.m. UTC. So let's mark out this timing on our calendar, as we do want to be monitoring the outcome of this event. Then before our Wednesday's Forex Morning Mastery session, we also have a couple of mid-tier economic features to look out for, like the JOLTS opening, a labor-oriented data coming up tomorrow, 3 p.m. UTC. Then we also have a couple of speeches from Fed officials as well, which we also want to be looking at. So these are the major events to look out for between today and tomorrow, and by Wednesday we will be talking about what to look out for the second half of the week. Now, like I usually say, it's a usual narrative that I usually say here, that the anticipation of this event has its way of influencing how market participants will behave, and this behavioral pattern will reflect on the chart as price action, and that is exactly what we are going to be looking at this morning, to identify structural details that we are going to be using to strategically position ourselves for the next move. Now, talking about price action, let's scale right into the chart. And of course, the first asset we are going to be looking at this morning is going to be the USOILSPOT, as always. And of course, we had some interesting situation happen since the new week has begun. We saw a little bit of spike to the upside, and this could be attributed to the recent trade war situation I talked about earlier. And of course, to trade the US crude oil for this week, there are a lot of things that we need to take note of and include in our plans to navigate this market. First of all, we want to watch for tariff implementation and retaliation. Of course, I am beginning to get some feeds that Canada is also retaliating the 25% imposition placed on imports from Canada to the US. And we're also going to be looking forward to potential retaliation from Mexico and China, maybe in the form of countermeasure, and that may impact the energy market, because oil too is part of what US import from Mexico and Canada too as well. So this could make oil prices become volatile for this week. So we need to stay updated on trade negotiations, and definitely I'll be giving us updates if I find anything interesting to share. Then we are also going to be monitoring the OPEC Plus decision. Like I did told you earlier, that the OPEC meeting is ongoing currently, and any surprise deviation from OPEC Plus current supply strategy could influence crude oil prices. So we want to be looking at that. A stricter supply cut could push prices up, while increased production could weaken prices of crude oil. So we want to see what the outcome of that meeting is going to be like. Then, of course, our usual tracking of the US inventory is also another thing that we want to be looking at. We are talking about the EIA and the API report, which comes in on Wednesdays and Thursdays respectively. So we do want to be looking at that one too. Then we also want to be paying key attention to consider demand side risk, of course. While supply concerns are driving prices, a weaker demand expectations remain a key factor that could also influence the sentiment around this market. And taking all of this into account, we have begun to see some interesting situation going on right now, one of which is looking like it is favoring the uptrend situation for the US crude oil. Now, one of them is the supply disruption concerns from Canada and Mexico, with the US imposing a 25% tariff on Mexican energy imports and 10% tariff on Canadian energy products. So there are fears of supply disruption in the market right now, and since these two countries supply about 25% of US crude imports, any trade conflict could tighten supply, and this could escalate the prices of crude oil. And we're beginning to notice that happen during the early hours of today, but we don't know if this will be maintained. Now, another thing that we also take into account is the expectations from OPEC Plus. We don't know what the outcome is going to be like, despite pressure from Trump last week to reverse production cut. OPEC Plus is likely to stick to its gradual output increase plan, helping prevent an oversupply scenario in the global market, and this could drive prices higher. So for me, the path of least resistance at the moment is looking bullish based on all of these factors. However, we cannot ignore the potential of what the implication of this trade war could also cause to China as well. The US-China trade tensions are also escalating, and China, being the largest importer of crude oil in the world, who are set to face a 10% tariff on its export to the US, may affect their economy negatively. And if this happens, it could lead to lower energy demand, and this could exert selling pressure on prices of crude oil. So for me, these are the major factors that are likely going to be driving this market for this week. Now, let's go into the chart and see how market participants are digesting this information and what the behavioral pattern is telling us about the likely direction of where price action will be going, at least for the first half of the week. And to do this, we shall be scaling up into the 4 hours time frame. Of course, we want to have an holistic perspective into what is really going on in this particular market. And if we look at things from an holistic point of view, I'm not going too far here. I will just start from the mid-month of January. That's about 3 weeks from 3 weeks ago. You will see that the market has shown signs of a bearish momentum as price had continued to find lower highs and lower lows. And to further emphasize this, you will see that we have a descending trend line in place after connecting the series of lower highs. So this has happened. This is a 3 weeks period where we've seen price find lower highs and lower lows, emphasizing the strength of the sellers. Now, something interesting happened about a week ago. We saw that despite the strong bearish momentum, price was unable to break through the $72 area, and every attempt by sellers to break through has always been met with strong resistance from buyers, giving us a sign that this may be a platform that could incite buy pressure. As you see, this continued into last week's trading session, and the fact that price action has broken out of this descending trend line for the first time in 3 weeks, for me, is a sign that we might be in for a reversal and, of course, a trend continuation. So if you take a closer look at the larger perspective, after this impulsive move to the upside, price retraced into this area, and it could be a platform to incite another wave of bullish momentum, especially in an era where we are looking at trade wars and potential supply disruption at this point in time. Now, with the situation we have here, my key level for this week is sitting at the $72 area. And of course, this means that I will not be selling unless the structure is breached and broken to the downside. And when I say I will not be selling, I'm talking about a long-term perspective. Though we could still see there's still the potential of some short-term sell positions, which could be as a result of profit-taking activity, and of course could be as a result of the technical expectation that price could still come back, retest the structure in an attempt to continue the uptrend move. So to prepare ourselves for this week, we are going to be looking at how the market had started this week, and of course how the market participant had reacted to that $73 level. And to do this, we'll scale down into the 1 hour time frame, and right here on the 1 hour time frame, this is what I was able to come up with. So we can see that the last 1 2 3 4 5 6 7 8 9 10 10 hours we have seen the market go through a consolidation, though the week started with a sharp bullish move which never lasted, and we saw a sharp rejection giving us a shooting star candle for the first candle for the week, and then price confined within this old structure of the 74.50 and the $73 area. So I did place a buy this morning. If you look at the trading panel at the bottom of your screen, you will see that I already placed a buy for the crude oil at the $73.64 level, considering that volatility that I saw this morning and coupled with the fundamentals I talked about earlier. But it appears that the momentum is thinning out at the moment, and this may lead me to closing the position anytime soon. But I still want to wait maybe for an hour or two to see what happens around this area. Now, if you look at this here, you would notice that we're beginning to notice a form of barrier around the $73.50 level, somewhere around here. I would like to give it a different color. Okay, so we have the $73.50 level, which has been a barrier in the last 4 to 5 hours, I think. And if this persists, it could incite selling pressure, where the breakdown of the support line of that range bound at the 73 could incite a retracement back into structure, that is the descending trend line we spotted on the 4 hours time frame. And if we look at the distance between that breakdown and the current structure we are talking about, that's about 150 pips thereabout. So I'm willing to be part of that move if that is going to be the case. So I want to see price breakdown retest the 73 for me to be part of a bearish move at this point. So I still maintain my bullish bias here. Hopefully price will break out of the $73.50 level. And for those of you who actually missed out on that opportunity, placing a buy stop order above the $73.50 level could make a lot of sense, and then looking to add more positions at the breakout of the $74.50 level. So I will watch this candle maybe for the next 30 minutes to 1 hour and see what happens here. If I begin to see lower lows and lower highs on my 15 minutes or 5 minutes time frame, I will be forced to close the buy position in a loss and then prepare to join a sell at the breakdown retest of the $73 area. So that is my simple view on the US All Spot. So you can see here our center of focus is between the $73.50 level and the $73 area, where depending on the direction of the breakout will determine if we are buying or selling the the US All Spot today. And if we are selling, I would like to place my TP target at the 71.50 area. That's about 150 pips, and then monitor how price action will react to that structure. If price drops into this area and I begin to notice something like a double bottom structure, I will be buying the breakout retest of the neckline to continue that uptrend move. So that is my view here on the US All Spot. I hope I made myself very clear. If you have any questions, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So, in the absence of no questions, I'll take that as a confirmation that we are all good to go. I hope you've marked out these levels accordingly. Let's see how the market will play out around this area. Like I said, I already have a buy position triggered. I will wait for about 30 to 1 hour to see how this momentum goes. If I see lower highs and lower lows on my 5 minutes, 15 minutes time frame, I will be forced to close this particular buy position in a loss and then get ready to be part of the breakdown retest of the $73 area. In fact, I would like to see a breakdown retest to join that bearish move to the downside. So let's see what happens. I wish you guys the best of luck on the US All Spot commodity. So the next asset we are looking at the moment is going to be the USDJPY, and of course, after a couple of sell positions last week, remember we sold at the beginning of last week, we had about 50 pips thereabout. The second half of the week we also had about a 30 pips thereabout, or 50 pips from a sell position before we saw that bullish traction begin on Thursday's trading session, and this could be attributed to the core PCE report, which reflected that inflation is coming back into the United States. And of course, we know what happens when core PCE rises. It usually influences the US dollar positively, and that led to the situation we are seeing right now. And for us to trade the USDJPY for this week, there are a couple of things we need to be looking at before making any informed decisions. This week we have a handful of high impactful events to look out for. We are going to be monitoring the ISM manufacturing PMI, the services PMI, the the average hourly earnings, and the non-farm payroll report. And of course, a strong data, a strong report could boost the USDJPY, while a weaker data may trigger a pullback on this particular asset. So that is those are these events we need to be looking at. Then we also want to be watching the space, the financial space in the Japanese economic docket as well. Policy development, we want to be looking forward to any form of news as regards to this. Any new signal of rate hikes from Japan could strengthen the yen, potentially leading to a USDJPY decline. So we do want to be paying attention to that. And of course, this could lead to a lower differential value between the US-Japan bond yield spread. And if this yield gap continues to narrow, it could limit a further USDJPY upside and make the Japanese yen more attractive for investors to invest in. And also, we want to be following geopolitical and trade war risk. Of course, if Donald Trump's tariff escalates tensions, risk-off sentiment may strengthen the Japanese yen as a safe haven, leading to potential reversal on the USDJPY. So we need to be paying attention to some of these factors during the course of the week. So if you're a USDJPY fan, these are very, very necessary to keep on your radar. Now, let's talk about the sentiment surrounding this market, which has been influencing the market so far before the beginning of this week, and what are the chances that they will continue to influence the sentiment in the market. Now, let's talk about the positivity that led us into where price action is today. So we saw price started at around the 154.00 area on Thursday, and then culminated at the 155.800 at the end of Friday's trading session. And this is attributed to the recent rally of the US dollar across all board, nearing a 2-year high, which has also helped the USDJPY extend its recent gain. And this is supported by the announcement that Trump will impose tariff on Canada and Mexico and China. And this economics uncertainty fueled demand for US dollar as a reserve currencies. And that's basically what drove the market so far at the moment. So at the moment, I strongly believe that major key players will be looking forward to the ISM manufacturing PMI today for further clues into the economic situation in the US, and of course the non-farm payroll on Friday, both of which could further influence the US dollar sentiment. So we never can tell what could happen at the moment. Price will go through a consolidation phase, reflecting the indecision at the moment as market participants wait for this major event. Now, besides the fact that the US dollar is strong at the moment, we cannot ignore some drivers that could influence the price of the USDJPY to drop, that is, support the Japanese yen. Now, the Bank of Japan's summary of opinions revealed that policymakers are discussing further rate hikes due to the recent inflation that was revealed about 2 weeks ago. We saw the core inflation in Japan rose at the fastest annual pace in nearly a year, increasing the likelihood that the Bank of Japan may want to consider more monetary tightening policies, which could also help strengthen the Japanese yen, and this could further narrow the US-Japan yield differential, the bond yield differential at the moment. So these are things we want to be looking at, and to understand how the market participants are digesting this information, we want to scale back into the chart and let's look at things from a technical standpoint. And this obviously will reveal to us how the market participants are thinking about the current market dynamic. So my first point of contact ahead of this week was on the 4 hours time frame, after taking into account the character of price action in the last 3 to 4 weeks. And the first thing I did observe here is the fact that price action is going through a downtrend move. Look at what has been going on since the 10th of January, where price has been finding lower highs. And if you connect this lower highs, you can see we have a beautiful descending trend line that will be helping us navigate this current market dynamic going into the new week. And despite the fact that price has been going through a downtrend scenario, something interesting happened last week. Remember, prior to the beginning of last week, we were hopeful that the market will nosedive due to one, high inflation in Japan, two, Bank of Japan increased interest rate for the first time in 18 years. So everyone believed that this could incite bearish momentum. However, the strength of the US dollar negated all attempt by sellers to break through this area at the 155.7000 area. And for me, this could be a red flag that we could be seeing a reversal setup unfold. And in fact, if we take a closer look at the structure, we're beginning to notice something like a double bottom structure evolve here, leading to price breaking out of that descending trend line. Now, the question going into the new week is whether this breakout is going to be a true one or a false one. So that is what we are trying to wait and see here. If it's going to be a true one, we are going to be seeing price breakout, retest the structure, and that will be a beautiful opportunity to maximize this uptrend scenario. But if it turns out to be a false one, then price breaking down the key level at the 155.00 area, which is just right below that descending trend line called inside selling ideas, where a further breakdown of the 155.700 could welcome more selling opportunities. So what we are going to be doing now is to scale down into our execution time frame, that is the 1 hour time frame, to see how the market is playing out around this particular structure. So when we scale down into the 1 hour time frame, this was what I was able to come up with. So we have the situation here. The week had started on a strong bullish momentum, breaking out of that descending trend line to find a resistant line at the 155.900 area. So we do have a range bound structure. And it appears I entered this buy positions too early. I should have waited for price coming back to retest the structure before jumping into a buy. But I've already bought already, and I think I'm running in a loss at the moment. Yes, I think, yes, with about 27 pips of loss on the USDJPY. So hopefully, let's see what happens around this area. Will price come back and retest the structure? If it does retest both the 155 or the trend line, I will want to be adding another buy position to maximize the bullish move, and of course add more buy position at the breakout of the 155.900. So in fact, I would like to place a buy stop order right away, just in case I do not forget this. So let me just do that just right away. Hold on a second. So I just placed a buy stop order above that level, just in case price moves up. I want to maximize the uptrend scenario. But at this moment, I will just wait. For those of you who are yet to join this trade, let's wait and see how the market will react to this trend line. If it does a retest of structure, if we find buy pressure around this area, we are willing to add more buy positions to our existing trade. But if price goes ahead to drop below the descending trend line, I'm looking at selling below the 155.500, and of course had more at the breakdown of the 154.800. Now mind you, if we sell around this particular area, as soon as price gets close to the 155.700, that's about 100 pips thereabout. Move your stop losses, secure the position while we wait and see how the market is going to be reacting to this particular structure. So I will be updating us on my Telegram platform, of course, on whatever is going on around this current market dynamic. So that is my simple view on the USDJPY. I do hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So that is that on that one. I'll take the next 5-10 seconds. Let's see if there are any before we go ahead to take the last asset on our watch list. Okay, I see you, Adeni Babalola. Good morning to you. I trust you are doing very well. Nia says that BTC played as you analyzed yesterday evening. Oh, great. Yes, we saw the breakdown of that ascending trend line. I saw it this morning too as well. I hope you were able to make some profit out of it. And if you did, please move your stop loss according like we have discussed, not to get caught up in any form of pullback that might lead into a loss again. So well done on that particular one. All right. So in the absence of no questions, I want to assume that we are all on the same page. So with that said, let's move right into the final asset on our watch list for today. Stay tuned. So the final asset on our watch list for today is my favorite, as always, the XAUUSD, popularly known as the gold spot. And I shared an update this morning on both my TradingView and Telegram platform with a setup that we are going to be using to navigate this market for the first half of this week. And I personally entered this buy position very late. I should have entered before posting that. I don't know what happened. I got caught up in that excitement of that beautiful setup around the 2790, and by the time I typed all I wanted to type and send to you on the Telegram platform and on the TradingView platform, by the time I came back to the chart price, I'd already moved way above that 2790, making me miss out on that opportunity. So I had to buy that at a very late entry. I had a late entry there. Hopefully it will continue to the upside from there, but if it doesn't, I will just take that as one of those things that leads that we go through if the market does not move as we have expected. So I will be explaining to you what had happened, though I already shared my analysis, top-down analysis on this asset during the course of the weekend. I hope you watched that video, and if you did, well done. If you haven't, I will advise you to go ahead and watch that video, as I will not be able to go through that again. So we're just going to be focusing on that execution time frame, which is the 1 hour time frame. Now, to navigate the gold market for this week, there are a handful of things we need to take note of. We have US economic events. I talked about this earlier. We are looking at the ISM services PMI, the manufacturing PMI, we have the NFP report, and of course the average hourly earnings. So if economic data shows weaker than expected growth, the Fed rate cut may strengthen, supporting the gold commodity, and if it's the other way around, it could influence a stronger US dollar. Then we're also going to be monitoring the Treasury bond yield and Fed statements. Especially, we are going to be looking at Fed speeches during the course of the week. A further decline in the US bond yield could help gold rebound, while a hawkish Fed tone may pressure prices to the downside. So we have a handful of Fed speeches for this week. I did mention like 3 or 4 of them. We have Fed Bostic today. That's about 5:30 p.m. UTC. We have Musalem 11:30 p.m. UTC. Then tomorrow by 4 p.m. and 7 p.m. UTC, we have Bostic and Dali respectively as well. So we need to be listening to what these Fed officials will be saying. Any form of hawkish tone may pressure prices and push the price of gold to the downside. Then we're also going to be tracking trade war development as well. I have my feet on, and if Trump escalates tariffs or retaliation increases, the higher the chances, the higher the uncertainty in the market, and gold could benefit from this, considering it to be a safe haven asset. And then I think that's basically what we want to be looking around for the gold market. Then what are the market drivers that is influencing the market so far? Well, this week had started on a strong bearish note, as you will see here. Price started somewhere around the 2,800 and it dropped into the 2,772 level before it began to recover again, giving us a range bound structure at this point in time. And what could have driven that? Well, I guess it is an hangover from last week's economic event. We saw the US dollar strength nearly hitting a 2-year high on Friday, and this surge in the US dollar was strengthened by Trump's trade war escalation, making gold more expensive for foreign investors, and this also limited that upside. And of course, we saw the higher inflation from the US core PCE on Friday, where the index rose to 2.6%, and indicating inflationary pressures still remains in the United States. And this supports a more hawkish Fed outlook, which is very, very negative for the gold commodity. And we also have the potential that the Feds may delay interest rate cuts due to this current inflation, but the market is still pricing in 2 Fed cuts for the year. So it's a little bit dicey, and we can easily understand how the market participants are digesting this information by looking at what is going on the chart. Now, before we go into the chart, I want to tell you that I still strongly believe that the path of least resistance for the gold commodity is to the upside, and thanks to a bunch of new development going on across the market space. We have the global risk aversion, which has led to increased safe haven demand in gold, as concerns about the economic fallout from Trump's new tariff on Canada, Mexico, and China could trigger a fresh wave of risk aversion, driving investors towards gold as a safe haven asset. So I still believe that the momentum is still to the upside. Then if we take the lower US Treasury bond yield at the moment into play, where fears over economic slowdown in the US from trade tensions could drag the US Treasury bond yield lower, making the gold much more attractive for investors. And then Trump recently has been pushing for lower interest rate. Trump continues to pressure the Fed for rate cuts, and if policy easing materializes, it could weaken the US dollar and push gold to the high side. So for me, I still strongly believe that the path of least resistance is still looking to the upside. So I will definitely be looking out for more opportunities, or looking for areas where I want to be buying the gold. That is, looking for buying opportunity near dips. Given the ongoing economic concerns, gold could still remain well supported on pullbacks, especially around technical levels we will be identified on this chart. Now let's go into the chart. Let's see how the new week has started. So like I said earlier, we have a range bound structure coming from this strong bearish move to the downside and this recovery in the last 6 to 7 hours, giving us this range bound structure to work with as we go into the first half of the trading week. Then secondly, the fact that price still remains above the key level we identified on the higher time frame makes it makes the upside still looking very interesting at this point in time. So I'm still holding on to the bullish bias. And thirdly, price still remains above that ascending trend line we identified in my recent video on the gold commodity. So the path still remains to the upside here, so I want to look forward to more opportunities to buy. Now, for those of us who missed out on that buy entry around the 2,790, let's see if the market will come back to do a retest of structure. It could be the retest of the 2,790 or even come to us 2,780. Now, the emergence of a reversal setup like a double bottom, inverse head and shoulder pattern, falling wedge will be all I will need to continue the uptrend move, and looking to add more buy at the breakout of the 2,807, and in fact a further breakout of the highest level 2,817 ish will further welcome buying ideas. So that is what I'm looking at to buy the gold commodity for today. And of course, I will be scalping this market in the go challenge. So in the next 1 hour 30 minutes or so, I will be there to scalp the market together with you. Now, in as much as we're looking out for buying ideas, remember, we cannot ignore the potentials for sellers. The US dollar is currently strong at the moment, and there is a tendency for hawkish outlook from the Fed officials later today. And of course, the recent strong consumer spending results from high inflation could also pressure the gold commodity. And if that is going to be the case, I would want to see price action break down the lowest point for this week. Then a retest of structure would be beautiful opportunities to join a downtrend move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us an update on how we are going to be navigating this market together. Then I see you, Soldier Pete. Good morning to you. Trust you are doing very well. How are you doing? And how was your weekend? So Soldier Pete says here, how are you going, still crushing it? I guess I don't understand what you mean. How are you going, still crushing it? Or maybe that's okay. I'm doing fine, and we are still crushing it here on the Forex Morning Mastery, isn't it? Okay. So that is on the gold commodity. I want to know if you have any questions as regards to what we've talked about. If there is, please drop them in the comment section. So I will take the next 5-10 seconds to see if there are any before we start rounding up on today's Forex Morning Mastery. Stay tuned in. All right. So I guess we have come to the end of today's Forex Morning Mastery. Gold is getting momentum back. Hopefully it continues to the upside, and I hope that the US also would do same, as the total loss we have right now is at -$3 at the moment. Let's see how the market is going to play out going forward, and trust me, I will definitely be updating us on both my TradingView and Telegram platform. So it has been a wonderful moment with you guys today. I really do appreciate every single one of you. I just saw a comment now from Anas Atap. What's the trading levels for today for gold? Well, I guess you're just coming in, Anas, but I will do you that favor. Let's revisit the chart and see what we did talk about on the gold commodity as levels to look out for today. And if you missed out on the narrative surrounding the fundamentals, I would suggest that you rewatch the live video after the end of the session to get a deep insight into what we did talk about. So like I did say here, we have a couple of levels here, and that is making me feel comfortable buying. Sorry, three factors here that's making me feel comfortable buying. One is the fact that price still remains above that ascending trend line we identified in my recent video on the gold commodity. That's one. And you know how we use our ascending trend line, of course. As long as price remains above them, we maintain a bullish bias. Then secondly, price action is above my key level at the 2,780. Now this morning I updated us with a new setup using the 2,790 as a platform to continue the uptrend scenario, which is what we are looking forward to. And of course we have the 2,807 to add more buy positions at the breakout retest of structure. And if it's possible that price breaks out of the highest point at the 2,817-ish, we are looking forward to add more buy had the breakout retest of that structure. So for me, and based on the current market dynamics, I'm holding on to a bullish bias. And I did say here that I will not be selling unless this lowest point for this week is breached and broken to the downside. In fact, I would love to see a breakdown retest of that structure to confirm that truly sellers are in to go move price to the downside. So that is a summary of what we talked about. I will advise you to also watch the sentiment surrounding the market. I talked about this at length after the session. You can watch the replay of the live session. So that is that on that one. I hope I made myself. We were able to take on all of the three financial instruments on our watch list, which includes the USOILSPOT, the USDJPY, and the gold commodity. And we were able to identify simple trading setups that we are going to be using to navigate this market today. I do hope you marked out those levels and structures accordingly as we have discussed. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. And I also want to state this. I keep on telling you time and time again, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And for those of you who joined us for the first time, I do hope you were able to gain one or two things from the session. If you did, you do want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing you guys same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we begin to review how well this asset have done, and of course prepare for the second half of the week. And thanks again for everyone who had supported the channel. Your likes were very important to me. I really appreciate your support. Thank you very much from the bottom of my heart. So it's on this note I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.